Good morning. Hello and good morning. Welcome to the Breakfast Club. My name is Darren Hancock and I'm working on the ThetaWave Trader. Trying to become the ThetaWave Trader. The ThetaWave Trader is a mindset, not really a person. It's a type of mind to accomplish, that calm, focused, just read price action till you're certain of your entry. That ultimate focus that you get when you're in the theta wave part of your brain. It's like that ultimate focus, ultimate awareness of all things when you're in that state. On sell side liquidity this morning. Let's see, make sure we're up and running here. Look at that. 765 people. What happened? What did we do yesterday? We must have done something right. Maybe it was because Michael was in town. Morning, Victor, Tommy. Good morning. Good morning. Good to see you boys in. First in this morning. There's 3 of us, 765 people. Look how fast we're growing, you guys. That's lovely. All right, let's get started. Look at that run on the sell side there this morning, the BPI. All right, so if this is going longer, we're looking for this 1 hour. Let's look at the daily here. Start from the daily and work our way down, shall we? So the dailies come all the way down to this imbalance that we see over here. Look at that. Tap the top of it nicely inside this order block, and we've had a nice little reaction off of that. So ideally, I'd like to see this high get taken with a close, come back, find some support at that, continue higher, digging into that inversion fair value gap above us. On the 1 hour, we had to run back up into this up close candle. Let me get rid of this thing here. Equal highs, relative equal highs here still. Got a huge run down here and clean out all this liquidity. So the whole sell side's taken now. Returning to the midnight open candle. Wait for the range to set itself up between 9:30 and 10. But ideally, if we're going to continue higher, I'd like to see us take out this high and return to that high here before going higher. So huge run down, come back, fill that, continue on. If not, I'm neither bullish or bearish right now until we decide what the range is going to be when they open that up today. We'll see where the regular trading hours are. You see how NQ, the NASDAQ isn't even close to filling that yet. We're almost finished now with ES, and Dow Jones is already finished. It's already ran it through. Highs are taken, reversal. And because this order block is right on this fair value gap, wait for it to get taken out here, return to it here. And we're running down inside this range now. So this is a nice reversal above this old high. Now you could technically come all the way down inside this range here. This big SIBI we've got that was built from the 8:30 open. Right now you're bearish in that one. And don't forget to pay yourself at appropriate levels if that's what you've caught this reversal here. This could be the old bear trap if it comes down to this, just pops through, turns around, and then takes you higher. You got to see this one cleared out if it's attached to the busy. And this candle does that. So still bearish on Dow Jones. ES, still waiting on ES to take that high out. And then it's a wait and see. And NQ hasn't taken out its high either. We have this little fair value gap here. We've traded it away from it. Haven't quite traded back into it yet. Not a strong reversal for me, so we're still going higher. Dixie on the daily. This low. We've traded back up into this order block inside this fair value gap, and we're breaking away. I'd like to see us take out this low. I see a body get down here, close below this imbalance here today, return back into it. We set today in Tuesday's low, Wednesday, Thursday, looking for continuation on the downside. It's still inside a small range here, right in the middle of that whole range, so it could go either way really. There's this draw on liquidity here for me, this downside imbalance sitting right here, and then obviously the fair value gap below us hasn't yet been filled, so I'd like to see this fair value gap here get traded below and then back into it, find some support to continue short. That would put more upward pressure on the Forex pairs or Forex group. So you're looking for upside run on liquidity here. Continuation today. As that American dollar starts to dip down into that imbalance, we're looking for a run back up into a fill here. GBP finally making its presence known in the old fair value gap. So I'd like to see that dig a little higher into the inversion. And this overall SIBI here, there's one sitting right in here. So we'd like to see it start digging into that now. See, this was a really nice return to this fair value gap. We got a body above it, came back, tapped it, came back one more time with that PPI numbers and slam right into it. And now we've had a nice reaction out, looking to go higher. Body trades above it right here. Look at this run all the way down into the order block here, fills this fair value gap, snap back up. That was nice on a 15-minute chart. So look for more upside in currencies. Japanese yen, we're looking for that continuing on the downside. I think it was Japanese yen we'd mentioned that we'd love to see that yesterday come back up, take these highs. So if you look at the high over here, it says 898 and 907. Here, 908. Took those highs out that went down. So we wanted to see that yesterday. I thought it would come right into at least the mean threshold of that. Didn't. It was just one handle above these highs and dropped down. At least that worked out the way we were wanted it yesterday, calling it yesterday. So again, we're looking for the lows to get taken, and then the fill of this fair value gap traction, looking to go above its highs, take out its recent highs, and then look for rejection block and old highs above you. Nice and clean. This is what we're looking for in NASDAQ. You take out the high, then trade back into fair value gap, the continuation. This is your swing at 830. And then the continuation to the upside. So that's what we're looking for in NASDAQ. Same kind of thing. It's kind of lagging behind right now. Australian dollar. Probably gave us the same kind of setup this morning. Body trades above it right here. There's your swing. Trade back into it. Continuation on the upside. And did not take out any. You have to look to see if this took out an old high. No, it's right into the rejection block. Look at that on a 15-minute. See that? Right into the rejection block, just when you think it's going to take out those highs. That's why you pay yourself a rejection box. And then we get below inside this range here, top of the order block. Get some leverage, some foot hold on that, and then start driving higher. So far so good. Australian dollar. And Japanese yen. Oh, sorry, was that CAD that we were talking about? Sorry, that was CAD, not yen. This is the Japanese yen. Sorry, this is Japanese yen. Back into the order block. It's taking this high out. And now you're looking for a continuation on the downside. I wouldn't want to see that go any higher than the mean threshold of this candle. And what do we have for reversal side? Order block. We return back into this order block right here. That's a short. The hourly, you want to see it get below that, come back into here. So let's see what this looks for 10 o'clock. Taking out these lows with a body, come back inside, take that high, or this order block for a short. Oil. I got in on an oil trade yesterday. It's doing really well. I caught this reversal yesterday. And the trade back to it. Inversion. And definitely in this well. I'm looking for this low to get taken out here. So my final objective is down here. But I'm managing it from the back end because I only have one lot on it. So I'm just making sure that I'm far enough. I've got to be prepared for any type of reversal to happen. So I'm managing it from the back end with a fail safe. So if this high gets taken out, I guess you could allow for a wick to come up into here. But if we have a close above here, then I'll take that trade off. So I've been calling for oil to get down into here and here for a while now. And we're slowly getting there. I'm looking for it to run into this, take these equal lows out down here and back into for me, the draw liquidity is this fair value gap below us here. So my next objective is here. And we'll see where it goes. RS, let's run into that. Gold. Got a couple of nice little gold runs there yesterday as well. There was some nice reversals there. Body gets above it right here. And order block here, body gets above that. You either come back into the order block or back into that fair value gap. Fills this one, get a reversal, and you're going to carry it all the way up. Kind of like what we're doing with oil. You wait for that first reversal to prove itself out. Say, hey, look, it's changing directions. Body breaks below it here, comes back up. Inside that one, that's the only reversal I can see here other than these suspicious ones. A clean reversal is that when the body breaks below here, comes back up, taps it once, gets short. So if you're long in here, if that's not a specific objective you're aiming for and it's a new high anyway, if you get confirmation that you've now broken structure, then you want to get out of that trade right when you trade back through it, and that now becomes an inversion. Close that trade out. So it's one way to kind of manage it on the way up, which is what I'm looking for in oil. What have got in silver? Is there anything in silver for you guys? This is 4-hour silver. Let's do 1-hour silver. Lows taken. Fair value gap. Body trades above it. You trade back inside it. You have 1, 2. You wouldn't have the third one, but you had the first 2 for continuation. Reversal. And you wait for this. So you think, okay, I'm just cherry picking this. Well, look along here. Where could I cherry pick along here? This reversal. It's not here. It's not here. It's not here. It's not here. So you wait. If this was live, you'd be waiting for this. And as soon as you saw this, boom, a drop down below this. If you're in this, you get out here. As soon as it returns in here, here's your reversal. You come back up inside, you get short. Right there. So you turn your long off and put your short on. And then you wait for the reversal to occur on the opposite side. Or break in structure. So you've got an imbalance right here. And yes, they're small. They can be little tiny things. You've got one here. Body trades above it. Then you trade below it again right here. And you go, okay, I'm wrong. I'm still going short. Comes back up, gives you one opportunity if you're going long to get out right there. You're still short. Takes the lows. Body breaks above it. Come back inside it right here. Wicks are all respecting it. Look at it right here. You've got one here, but we're looking for the opposite side. And then you continue forward. You wait for a body. If you're seeing these highs get taken out in the swing point to get taken, no body trades below it. Still looking for higher. Body, here you go. Here's one. Body takes out the low. You come back to it. That trade is off. Then all of a sudden it trades back through the body again here. And you go, oh, now I'm going long again. It comes all the way back inside, gives you an opportunity, and actually closes below. So you're going long, you're going short, but it comes back to an area that you're looking for a little bit of wiggle room. Below here, there's a little imbalance. Comes back, fills that, continues higher. Looking for this fair value gap in here. You want to get through this now. You have to close above that to continue going higher. For silver. Also, this fair value gap sitting here. So that's silver. Bitcoin. reversal, but you couldn't get in on it. Can't even catch the bottom of that one. It left town. Body trades above it. We come all the way back down inside it. Remember I was telling you earlier on one of these other ones that you can get this run all the way back down inside this to the very bottom. That breaks the high, so you're going long all the way back in here. So if you put 1, 2, 3 trades on with maximum 1% of your trade way down here, and you've got your stop, your entry in here and your stop down there, is that really worth it for you to be in something like that? Or do you want to go, look, I want something that's perfect for me. I want this one right here. If I don't get it, I don't get it. And you don't get it. You're more conservative. You say, oh, I'm a little more risky. I'll take the middle or the mean threshold, consequent encroachment of that SIBI. I'll take that as the entry. You're in here. You're weathering all this for it to come down. And you're waiting for this to trade below this with a close. If it trades below it with a close, you close out your stop loss before it comes to you. You get another reversal right here. Body trades above it, trade back into it, and you go long. So every time you see a little low get taken out like that, these little lows get taken, look for this reversal pattern to start happening just to catch your next run back up into a premium array, which would be this one right in here inside this range. So there would be your fill. Be mostly out there, or you pull your fib tool on that and pull your 50, 62, whatever. There's multiple different ways. So you just manage that from that back end like we're doing with oil. You manage it from the back end using your fail safe. If you don't have a fail safe, it's no big deal. It's just something new. It came up with, other than just a trailing stop loss, a fail safe is a little bit more dynamic. Is that oil? Yeah, it looks like oil closed out. Came back, it took me. So it traded through here on a close and then came back and took out my trade. So I wasn't watching it, but that's the reversal, right? Here's a reversal right here. Body trades above it. Didn't see that one when it was heading down here. This might have formed while we were playing. That 1, 2, 3, 4, 5, yes, easily 6 minutes ago. So when this was continuing down, as soon as you see this and you see body trade above it, you go, oh, here's my reversal. It comes back in, fills it. That's where you close that trade out. So I could have closed that at a couple $100 more. But then there's the reversal and it came back, took me out. So you can see how it makes sense just to trail your stop loss behind you using a fail-safe method. And while I was chatting, that's why I missed this piece right here. That's okay. That was a nice little run from yesterday. Other than that, how are you guys doing? Did y'all have a good night? Did you get to relax, move away from the charts for a little bit, go for a walk? Clear your head of all the candles? Who we got here? Paul. You snuck away, Paul. Hi, all. I'm A. 2 days left. Can't wait. Paul, he's just a risk taker, that guy. Pumex. Thank you again yesterday, Pumex. I appreciate that. You're giving us a shout out to ICT, and it was nice to see him pop in and say hi, check out some of the stuff that we were doing yesterday. Tristan, good morning. David, good morning. Good morning. And Talk, good morning to you, sir. And Hounds, hello. Jonas, good morning. Good morning. And Chris Alley, a recent acquirer of a funded account. Powell talking at 10. Just a reminder. Yes, let us wait and see, my friends. Let us wait and see. I've started off my day really well, so I'm not going to push my luck too much today. We're just going to read some price action. But if you do catch a really nice reversal like that, and you can let it run, man, oh man. And oil was kind of nice to let that run yesterday. And not interfere with it. Like if I can trade and get into break even and just close your eyes and let it go, aim for your higher time frame objective. That's ultimately what we want to do, right? Is try and find those little entries in for those good opportunities to catch yourself on a short. And if you can catch that opportunity, just run above that high, catch it on the run down and start driving down. If you can catch that little run right off the top there and look for that swing point, and you catch it off there and you see it start to degrade, and then you move yourself into break even and let it run, and you say, I'm aiming for this candle's midpoint, or maybe for a rejection block or whatever, that whole day, and you just leave it alone. And you don't interfere with too much of those little reversals that you get. You just let it do its thing. Because you'll see on the 1 minute chart, you'll see these little reversals starting to happen. You go, oh, it's breaking structure. But if you're overall driven to a lower time frame, you kind of give it those little wiggle room moments, lunch hour, the retracement to lunch hour, then the continuation. See, this would have come all the way back up and really put some squeeze on me for trailing. And how would you have trailed your stop loss behind that? Unless you continue to put it up here and you're willing to weather all this. But now if I just wait and there's another opportunity above here, if this continues to push higher and we start clearing out some highs and we see a reversal happening, there's another opportunity to catch the top of the reversal to continue back down into the lower time frame or the higher time frame lows. And now it's building the range. So let's watch it build the range for the day. And then we want the regular trading hours will be over here. Martin, good morning. How are you? Tristan, we are able to refresh the indicator to see if last changes addresses your requirements. I did see it. I managed to get it working in, I think, GBP. Yeah, we've got these little triangles that are going on inside here. Swing, swing, swing. Catching it. It's nice. Reversal at a time when you're expecting a reversal. Yeah, it's good. So far, it's working pretty cool. I like it. I like it. I like it a lot. Thank you for that, Tristan. That's awesome. It's not working in here though. Let me. A very computer savvy guy. It takes me a long time to figure stuff. I'm almost 60. I'm getting there. So it's still doing what I want it to do here anyway. I'll keep an eye on it. Thank you so much for that, Tristan. That's awesome. There's a lot of cool things I'd like to do with you with indicators. There's another couple of indicators I'd like to create based on time and price too. Christoph, how are you? FTSE and DE40 seem to be out there top with no more energy, just a wick up. What's your tape reading on FTSE at DE40? Thanks. DE40. Let's look at DE40. On the 1 hour. You had one perfect opportunity there to get short right there. See that? Right off that inversion, we broke down below it. We came back up, revisited it. Now you're going short. If we get a body close above here on the hourly, then I would consider that a long back into this. Take out these highs. Yeah, if you get a body above that, then you're definitely going to go long. Look for the rejection block in the old high for your first scale outs. If not, we're retracing back into here. If you lose 50% of this wick on the close, we're looking for further downside. That's what I have for this. So keep your eyes right on that little area right there. Box that out, Christoph. And then if you get a nice little body close below that, which you have, comes back up, find some support at that, inside that fair value gap right there. You find support at that and continue through. Wait for the news, wait for all the news stuff to clear up and your day range to set first. Once you set the day range, and if you look at your regular trading hours and see what kind of gap you've got, split the regular trading hours into quarters. Look for that as a drawn liquidity initially. If you lose 50% of it, it'll probably take out this high here of the fair value gap. Look for higher prices. Again, keep in mind you've got this open mean threshold, rejection block, old highs. There's multiple PD arrays for you to aim for inside that bigger range that you're in, and you're in a premium if you count that wick inside that huge range there. Take that wick, split it into quarters for sure. What else did you want me to look at? FTSE, what's that? FTSE, am I drawing a blank? FTSE. This one here, I would imagine that's what you want me to look at. We have a reversal here. Body breaks the high. You don't get a chance to get in it, so look for the candle that initiates this run. Right here, body breaks above that. As soon as you retrace back into this, you go long. And it takes you a few candles before it finally comes back. That little run this morning was the run back to that order block to go long. Take out this high. You're in the rejection block, high. So now you're in a premium range. You wait for the rest of this to set up. If we get a run above these highs here, look for this fair value gap. The moment you start taking out highs, look for this fair value gap to form here. And if you drop below it, come back, find support at it. Or we do have a candle that separates here. So if you trade back into it, you can get short. If not, if a body runs through this and closes a body below there, look to trade back into this order block to get short. All the way back into here. So that's pretty much what you're looking for in terms of my shorts. Back into like array to like array. This has to stay open though. And 10 o'clock, clean that high out. If it doesn't, and if it continues to go higher, it goes higher. This short is still going long. So until this, if you're in this one right here, until that gets broken on the downside, I'm still long for these old highs here. I'm still long. You're still long, or someone's still long. That's what I see there anyway. And let's get back to NASDAQ. That's what I got for you there, Christoph. Or Christopher. Christoph. Tristan, I need a better calculation on where to place the markers. Sometimes they are too close to the candles. Yeah, if you kind of just place it on top of the wick, or just like a little spot above the wick, that way it doesn't kind of obscure the wick, would be kind of nice. Or even just I like the triangle, because the triangle keeps a nice square point on that. You get the wick can be lost inside that ball. So either put it just above it, or that little triangle works pretty cool. I think the GBP, you've got the triangle working. See how the triangle just touches the tip of it here? That's nice because it shows you exactly how high it went. Where's the little ball? Even though I'm sure the ball's just touching the edge of it as well. I still feel like, did it go inside that ball? Did it take that high? But anyway, you got the right idea. I like it. What's the indicator, Darren? Must have missed what it was for. It's just a magic numbers. For some reason it's been called magic numbers. It's those numbers that I talked about I gave you a whole bunch of different numbers to look for. Tristan's actually turned them into an indicator, and it's just an idea I've been working on for years for exact time and price and how to use it. So Tristan's just kind of put it into an indicator. So we're just experimenting with it right now. And as it continues to unfold, we'll continue to let you guys know about it. It is available on Telegram. It's no use putting it on your chart if you don't have a clue what it's for. Otherwise, you'll end up just putting more mess on your chart. Just watch what we do with it first, and then as you start to see it unfold, you'll go, that might have some use to me. Otherwise, it's just going to create more clutter on your chart. Because everybody wants to run to a new indicator or something. Yeah, it could be crap. What do I know? Crap, not because of Tristan's excellent work, of course. Because of some of my crazy ideas that I get. Morning, Russell. Dal, good morning. Fernando, good morning. Tristan, you can adjust the offset in the settings, but it isn't consistent across different instruments. Did you see the caret I added in the settings? No, I did not. Oh man, if you got a caret, that's our mascot, man. the mascot. Oh, it's over here. It's probably carrot. Oh, the carrot. Let's see if the carrot. Little carrots. Oh, so cute. Yeah, the carrots. You see how the carrots sit right inside the wick? They're inside the, but they are cute. I have to give you that. Nice. Diamonds and squares. You got the shreddies experience. Diamonds. We'll just stick with diamonds right now. Oh, not diamonds. Oh yeah, you can see how this can look really cluttered after a while if you're not careful. Let's put back on auto. You got auto in there? Or circle. I like it. And then we'll just talk about how to use it as we go here. This is hourly. Let's get into 4 hour. Nasdaq's finally broke that high right here. This is what we're looking for earlier. I don't know why I've just been ignoring this now. It finally, Nasdaq broke the high. Dow broke the high. We'll trace back. We said it could trace back anywhere inside there. You got back to 50%. Also, right back to opening day midnight candle. Opening midnight candle. ES finally broke the high. Body closed above this. Trace back in. 1, 2. See how this high was taken, but we didn't get a retrace back into here, whereas we did with this one. The high is taken, and we were traced all the way back to the New York opening candle. High is broken, but we did not retrace back to the opening, New York opening candle. Much more bullish, right? Return back into the fair value gap inside the range. But you pull your fib tool on that, you'll find that there's 50% of that range. 50% just popped over it inside a fair value gap. Now, if we put our thing on there, I bet you'll look for 36, 38. Look for our time indicator. Oh, you don't have 36 on this one. 36, 38. You'd have to go over here and pop that in there. You got 38 there. Oh, you have carrot in here. Yeah, so there's 50% error tracement. Pushing higher to take these highs. You've got a reversal. Body trades above it here, trade back into it here. Perfect precision entry right there to go long. You just got to look for your reversals, that reversal pattern, to start watching it and see how valuable it is and how reliable it is. And then look at the range and look for the like array above it that would support a run higher, or the higher PD array inside that range. Fair value gaps above you, inside here. You enter in here, exit there, or aiming for that old high. Or you just use the fib tool to pull back on that, go 50, 62%, chase up your stop loss. Or you can use your fail safe to support a run higher. If we break below this on a close, we're in a reversal situation. You don't get that. We have a full body staying above this. You continue higher. You want to see these get broken on the downside. If you're looking for a short, they're not. They're still going higher. So you're still in this trade all the way up into here right now, and you're just waiting. You're setting your stop loss right in here, below this, here, because if it trades below that, comes back into it, we're looking for a run back down into a deeper range. If you're just using a straight reversal pattern and a fair value gap inversion as levels of support. So you're looking for kind of that opportunity to see a fair value gap graduate. I look at them as they graduate to senior strength candles. When they become inversions, they seem to get a level of strength and security that you can bounce off of them. When they're fair value gaps, they can be reclaimed multiple times. The same as an inversion, I suppose. But inversions, you usually start to see as they break through them, they start to give you an indication that's a change in direction. That's the direction the algorithm wants to go in. And sometimes they can bang around, as you'll see in consolidations, where it goes above it, below it, above it, below it. But all the time it's below it, it's going down. All the time it's above it, it's going up. So you just wait till it gives you a higher. When it's doing that, you look for a higher PD array to get broken before you get back into a trade. You don't want to be sitting there trading every single time it comes through a fair value gap, unless it's in conjunction with the trade setup that you're running. Now I'd like to see this provide support here and keep pushing up higher. We've just run these little lows out here by one handle or so. You want to see this stay open here. If you're in ES, now this doesn't look so cheese grater like it was yesterday. Remember how lots of wicks chewing us up here yesterday? This looks like a little more friendly environment to play in. It was great. I love the carrot. Oops, sorry. Already rang in your ears. Apologize. Shepard, good morning. Derek, good morning, sir. How are you? Thanks for helping out Anton this morning. Or Arton. Thanks for helping him out. Okay, 5 more minutes. How's our oil doing now? Ugh. See, wasn't it good that I got out of that? So you can see how when you see these reversals, if you're trailing your stop loss behind this and you're using this failsafe, and you're saying if it trades above that reversal here, if it trades above that, then retraces back into it. I got to get out of this short that I'm in, right? So I trailed mine into here somewhere, I think it was, behind this one. Because if I knew if he traded above it, it would take me out. And then I finally, while it's over here, you saw me get the little sign that popped up over here saying you were taken out, which was right there. We could have watched, had we been watching this closer, you could have seen this right here and caught out at a perfect opportunity, like right there, or there. You could have got out for that short, taken off your trade there, and then when it goes long, you could literally pop back in and got another long on that. If you're steely-eyed enough to watch that and have the trust to go, oh, I'm just going to trust every reversal that I see. In this case, you'd be laughing. The money you made on the way down is the same money you're making on the way back up, and you're trailing your stop loss accordingly to the upside. And you wait for that to get taken on the downside in a significant part of the range. So you got to get like 50%. So a nice little body close below here would have been nice to go short on. Body has to close below. See how this one, you got one here. Usually you'll see one candle come through 1, 2. If it comes through both of them, trade the second one, not the first one. Because sometimes, the majority of the time, it doesn't come back up into that and just continues down. Like a nice strong displacement candle through 2 fair value gaps at one time. You'll see that. Hopefully we'll get to see an example of that a little bit later. What's this here? Is this one here? Oh, this one's just calling me a liar right here. It's saying, no, that's bullshit, Darren. Look, this big bull candle went right through both of those. And then what did this one do? It went ripping all the way back through all of them. What do you know, you lying toe rag? If we ignore the candle, my theory holds true. It just comes back to the bottom of this one. It does not trade back into it here, but the wick did. So don't listen to me. Candle here, blast through 1, 2, comes back up just inside the 1. You don't get that reverse fulfill of that second one. So it does happen. I just wasn't looking. Anyway, you see the wick. You get my drift, my flow. Kevin from South Africa. Yeah, my wife used to work in South Africa. I say that every time I see someone from South Africa. I go, oh, my wife used to work there. Everything's high. Germany considers conscription for men and women over 18. No comment. Yes, I had a student, Nils. His name was Nils. He was a student over from Germany that stayed with us when I lived in the mountains in Canmore, and he was telling me about when they go back to Germany at 18, they have to serve, was that 2 years in the military? Everybody has to. You have no choice. And then, you've done your service to the country. So I'm expecting a rip from Powell. DX strength in his speech. Really? 10 a.m. Here we go. You're expecting DX strength? Okay, that'll be interesting. I'm looking for a little divot. Let's see what happens in this. We're inside this imbalance. We're below the imbalance. We have traded here. Yeah, might get a swing. You might get some strength back up into here. From like to like. Okie doke. It's the women part to send to Ukraine. Let's see if it trades below here. It stays below here. Tuesday. What have we got here? Swing here, back up inside it here. You have a perfect entry right here for a short. 46, 52. Mix for a couple of minutes. I'd like to see this come all the way back down into here. Take these lows out. Come back to this fair value gap here from like to like. That was your reversal entry right here. I'll box it out here for you so you can see it. At a time, not that you're going to trade before the news release, but offer a rejection block here. Come back up, see a reversal. Get short, pull your stop loss in tight, looking for a run down into here. And then you got these equal lows. Back into this big old range here again, in that larger range perspective. And when you start taking out new lows, look for the reversal pattern to happen, because you may not get your objective. So don't marry this. Just stay on it now and watch price action and make sure that it's bouncing and behaving. This is a 7, set a low. That dot should be sitting down here right now. But that's okay. Immediate rebalance. So where this body closes above here, then you're heading back up into this range here. Again, you're not trading this during a news release, but just wait for things to settle out. This could be just coming back into that range. %62 back in a fair value gap here. Fill. Perfect fill here. We're reacting off that. Come back down. That'll be acceptable. Even though we have traded above this now. Tap down. Now I short would be out right there. Just if you follow the rules of immediate rebalance, this would be like a fair value gap. You traded above it, come back, found support at it. You've traded 62% of the range already. So now you kind of watch it from here. Do we continue going longer to here? Or do we break back down below this level right here? You have to get below this candle's low. Or this candle's close. If you don't, we're going higher. Oh, short 18,314. Yeah, so for me, if I was short, then as soon as you see this reversal pattern, then I'm out. Just because that's giving you an indication that you're going back into the range, probably deeper. And did you pay yourself at the bottom of the mean threshold of this candle? This big candle here inside this run? A lot of people don't target this thing. They tend to target the lows all the time. But you're in a news event, so if you did trade that, pay yourself quick. Find an opportunity to pay yourself fast. Just because you're playing in a really volatile type of situation where, you know, most people would advise against it. But if you're in the trade, then pay yourself quickly at the nearest opportunity that's in a discount range. Just my advice. I'm not saying you did it right or wrong. What you trade, how you trade is your business, but my advice is pay yourself quick, especially in volatile situations inside a small range. So you're kind of watching right here now. Now you got a body trading above here. You want to see this provide a level of support now and start pushing higher. So we got like array is in discount to like array that's in a premium. Oh, I didn't see this one right here. I was thinking, why did we not come back to a discount one over here somewhere? That's right here. Body traded above it, all the way through it though. All the way back down inside it. I would have been bopped out of it right there. Anyway. So now I look at the dot. See how the dot so close to that premium array now, right? If you're pulling your fib tool to here, if you were long off of this here, not that you should be, but again, we're just looking at this from a you just caught that on the discount side right in here, right? Your body, you catch that on the discount side, stop loss is down here, you start running up. As soon as it runs to the 50, you move yourself to break even, hits the 60, so you move to 50, it comes back, takes you out. So you're completely out of your trade in just that small one if you're using your fib tool. If you hold it and just keep your fib tool or keep your trade just below your or at break even and just let it sit there and wait. Give it some legs now to grow. Pay yourself at 60, pay yourself at 70, pay yourself at 75. If this reverses at 78 or 79% retracement, that's right off the premium array for optimum trade entry for continuation on the downside. So you're to be paying yourself on the way up if you're in these high volatile markets. So if you're venturing into this stuff, look at the range you're in and start paying yourself on the way up. It's super sniping. And whether people agree with it or not is irrelevant. That's how you that's how I would logically trade that, because see how you hit 75% retracement right now and we're getting the snapback 50%. It's coming through your entry now. If you haven't paid yourself, you are now just barely, you're no longer, you're breaking even and you're about to go underwater. That's why you pay yourself this optimum trade entry. You trail it up like that, you paid yourself at a maximum of 75% if you scale out each one of those. And now it's come all the way back to the beginning. If you start the trade all over again, it's like saying I got paid all the way up. I'm going to start my trade all over again here, and I'm going to work it all the way back up again. Stop loss will do the same thing. So as soon as I hit 50 now, I'll move to break even. 60, pay yourself at 60, 70, 75, 80. This is that buffering thing. If you get really good at it, you can start to trust that that's it, I'm out. Now I'm just going to reload it on again and start all over again, start my trade, aiming for that higher objective. And if it doesn't work, then you'll be out at break even the moment we hit 50% anyway. So if that's your entry, you'll be break even right there. But you paid yourself at 62 as well. Took half off at 50. Pay yourself at 62. And then you enter in again. Do the same thing again. You're just over 50% now. Move yourself to break even. Take half off here, small amount. Take it, pay yourself here again. Move your stop loss to 50% now. Pay yourself at 70. Not saying you should actually trade this. I'm just kind of give you an idea about buffering. How you can come back and just reload your trade on again. And you get situations like this that which just keep paying you over and over and over again. So if it came back now, it would take you out. So you would have had 50% off there, pay yourself there. And now it's swung all the way through to the very bottom of that. So here's your ideal entry. So that was an ideal entry right there. If it trades below it, you're out. If it comes back to 50%, move your stop loss to break even. Let's revisit. No, it's not good. You're already way, you should have just tapped that thing and left. So pull your stop loss out. You'll be out of that trade right there before it even comes down here now. Watch where it closes. 50% of that wick gone. Then you're looking for lower prices or close below that low. So that's the first thing you start getting nervous about. As soon as you see it come down like that and snap off, you think that's great. If it comes back to revisit, you go, no, 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 no. You should be just leaving now. So get suspicious when you see it coming back down to revisit it again. Wait a second. I want to see it snap out of there. Have it act your way. Don't, if it's not acting the way you want it to act, move to the sidelines and wait. See how we've closed below it now? Now we're going to run the low out here. So ideally you want to see this low get taken and you look for this right here. Watch this spot here. We did not get the low taken, so I'd like a cleaner one with a low. Ideally, you'd like to see that low get taken up for a swing. Just come back, revisit it. What are we at here, 19? Wait for 21, maybe 21 will take these lows out. Or maybe 21 will take those highs out. I like the lows. So this is the squabblers, same as this was the squabblers. Your 10 silver bullet for a short here. We should see a high or a low form right here on the next candle. eaten through your silver bullet if that's a inside a consolidation. I hate silver bullets inside consolidations. Back to an order block. Mean threshold. You want to see that hold price? If not, look for this higher PD array up here still. For it eventually, we've been waiting for it to visit it, come all the way back down. One more time. So look for 27 now. Big bull body above here. Mean thresholds holding price right now. You're inside a consolidation. This is where it's sitting right close to the equilibrium, right? Inside this range. It's right on equilibrium. So which way do you go? Right now you're bullish off of here. So you got no real PD array other than order blocks to key off of. There's no fair value gaps to really key off of here. So we're revisiting this up here. Good. Now we're running through it. It's looking good. Looking for higher. So we're not getting lower off of this guy. Break above. Continue on the upside. We break above the premium one on the upside. And you're looking for higher. Look for a return back into this order block here. If a body breaks above this candle's high that initiates this run, there's your reversal. Body breaks above it, come back, revisit it here to go long. And you're really aiming for that first objective up here. So you would have paid yourself here if you caught this. If that's one of your setups, it's like, I want to see it run. If I can't get in on this fair value gap here, I look for that order block. And if a body trades above it right here and we return to it, then I go long for continuation to the upside. $9.33 is not good. 9.33 is not good. The fair value gap, 9.33. Fair value gap at 9.33 is not good. You mean the 9.30 one? This fair value gap here, you mean, Jeremy? It wasn't good. No, this one wasn't good here because we traded. For me, I traded. You trade right through. If my stop loss would have been right here, right? If you look at this one, because if we trade below it, usually that indicates that we're going to go lower. And then it traded right back through it again. So then you say, now, once it's cleared this out here at 33, 34, and then you come back into it there, you could say, no, you didn't even get a chance to come back into it here. So wait for this whole order block, these old highs here to get taken. Body trades above them, come back into it here to get long. There's one of those, if you're off it and it starts to go back against you again to go back higher, wait for a cleaner high to get taken and then reverse, then come back into it. So in other words, if I missed this opportunity or it wicked or closed all the way through it, then came back and closed through it again, I'd wait for that high to get taken first before I re-entered into it. So in this case, it traded below you, took you out, then it quickly ran above you, and you go, okay, now it's traded above it again. If we come back into it, or if we come back into this old high here, then I can get shot long on this one again. So look right here, the top of that candle, draw it straight across, and bingo, you catch the run from there. So you look for the candle that initiates the run down. There's your fair value gap. Close below it, I'm out, taken out. You take a loss here. Runs above, you go, now I'm above it. Well, if it comes back into this, I'll take it. It comes back into that, you can take it long there. Again, it's easy for me to say after the fact, right? There's a lot of psychology involved in those three candles. This isn't just a simple, yeah, I'd take it there. If you took a loss there, that impacts you, especially when you're looking at your reversals and you go, wait, I trusted that that would go lower. Woof, that quick rebalance right through that range, came back up. I go, okay, well, now I want to see these highs get taken. Now you want a little more confirmation because you just got a nice slap in the face there, right? And then it gives you the confirmation here to continue higher. This one's a nice little delicious run. Had you caught this one here, and you're trailing your stop loss, your fail safe behind each one of these, you look for this, you think, now these highs have been taken. We're heading for that daily fair value gap right here. Mean threshold. You don't even get a you don't even get a silver bullet in here. It's just off and running. Eyes open for a silver bullet on YM. Sir, I lost 6 trades in a row using market maker sell entry model. What should I do? I think Derek's been working with you on that, has he not, Antor? I would have to look at you'd have to show me a screen capture of your entries, your exits, and explain to me your philosophy on your setup there. And I could probably point out where you may be falling apart there. I'm not sure. I can try and help you out, but I'll have to see a screen capture of where you entered, where you exited, and you have to put on the screen, like screen capture it, and then write on there, if you've got a way to edit it or an annotation tool, annotate where I went in here because I went in here. Here's where my exit is. Here's where my fail safe is. Here's where I know it's going to fail if I'm wrong. If you don't have those criteria, you don't have a solid setup for me. That's just my rules. You got to have it fails for me here. If it breaks this point, I'm wrong. Because if you ever put a trade on and you look at it and your gut's telling you that's going to come back against my stop loss, that's going to take me out. I can just tell that's going to come back. And sure enough, it does. And I knew it. Why does he get? That's because your unconscious is telling you, I'm recognizing something here is not right. That's that feeling, that gut feeling you start to get. This doesn't feel right because you see something that you're not consciously aware of yet, but you've seen it unconsciously so many times that you start to develop a feeling about it, which over time, if you start to listen to those feelings and really start to study price action, you start to go, that starts to make more sense. It starts to become more conscious. So that's the important thing you need to understand is you got to have a solid setup. You don't just go, 2021, it looks like it's doing this, so I'm going to put a trade on here. Why did it fail? Right? Here's my entrance. Here's my exit. Here's where that 2022 model fails. And if it fails here, I know I'm wrong. I got to get out. I got to cut my losses. And then if it fails there, is there an opportunity for me to catch up on the opposite side to recoup what I've lost? And that's, if you're doing that in a demo and you're getting frustrated, all you're focusing on, and what I read in your post was you had $100,000 account and you've lost a huge chunk of it already. So to me, all you're focusing on is how much money you've lost and how much loss you've had, instead of here's my setup, my A, B, C, D. Here's my entry, my exit, my stop loss, my trailing stop loss, whatever. You've got a good solid plan, start to finish, not just I'm Hail Marying it every time I see something that looks like a 2022 setup. Make sure it's clean and it's based on higher time frame premise, that kind of stuff. And then if it's falling apart for you, you go, look, I need help with this. I'm still missing it. And that's when we can jump in and help you out. But if you don't have all those clean setups and you're just hitting that enter button randomly because it looks like a 2022 setup with none of that other stuff in your trade plan, then you're wasting your time. I'm not going to be able to fix it for you because there's like 5 key principles you need to establish first before you even enter into those trades, as far as I'm concerned anyway. So first of all, that's your homework. Screen capture it, show me your entry, type out exactly what you were thinking, or get on a one-to-one chat with me and we'll talk about it and we'll talk you through the trade. And I want you to write down what you're thinking as well. When the trade's turning against you, or when this candle's acting, what are you thinking? What are you feeling inside? If this is creating anxiety for you and you're in your trade, pull your trade off, man. You're fighting your emotions, and that's going to really affect how you look at your trade setup, because sometimes you'll enter and then you'll panic, you'll get out, then it trades in the direction you want, and you're just totally reacting off of this gut-wrenching nausea that you're feeling inside. I don't know if that makes any sense to you, Antor, but I'm willing to help you out. You just got to screen capture it, write it all down, what it is that your whole trade setup, where you entered, why you entered in there, where you're going to exit, why you're going to exit there, and if it fails, where would it fail first for you to confirm that that's not going to work. And you can use hindsight, I don't care. And then I'll work on the plan with you. But you got to do the homework. I'm not going to do it all for you. Did you get one? Did you get one on the other indices yet? Did I get one on the other indices yet? Oof, there's a nice little reversal there. Oh, it literally sits right on it. Look at that. Then pops up above it, then continues through. So let's say you missed that one. So you couldn't catch that one, that reversal. Look for this. Body trades below it here, comes back up into it here. You can get short, aiming for each one of these fair value or these rejection blocks on the way down, old lows. This fair value gap here. You have a little imbalance sitting right here. Body trades above it, come back inside, going long, pull your fib tool, trade your 50, 62% on the way back up. You would have caught that all the way down and all the way back up again. Sorry, I'm going to clear my throat here. This is a potential short right here. You get one here and one here. They're kind of overlapping. If you're retracing back into this range here, you don't want to see it close above here. You're targeting here and that little initial one down there. There's some equal lows down here. So in other words, Antor, if you're looking at your trade, you're going to say, let's say you took this, you're looking at this here. You say, I'm going to get in here. If, and my entries in here, my exit or my stop loss is here, my fail safe is here. So in other words, this fails for me if I close above this point. That's my failure. And if it closes above that, I'm out. I'm going to take my stop loss off because I'm in the wrong side of it. That's your confirmation that you're on the wrong side. And then when it comes back into that, I can get long again. And that's your repair to your old high. Then move to the sidelines and wait. So here's our target. We've hit the target now. because we have this reversal. You wait for a body to get below here. Body trades below it. You trade back up into it, short there. Targeting here, here, old lows, blah, blah, blah. Rinse and repeat, folks. Rejection block, pay yourself here. It may not go through that. Pay yourself there. So that's what I mean, Antor. Simple little, and if you don't understand price action enough to know where it's going to fail, wait. Study it more. Stop getting frustrated by entering into demo accounts. Paper trade it. Just study price action. Don't worry about putting trades on, man. Trades are just going to create a whole new level of anxiety for you. Once you see the setups happening, then you can start doing some paper trades and start doing some demo trades and say, day in the park. Like, here's the reversal here. You see this body trade below it right there. On this candle's opening, you say, when it gets back into this, I want to buy, I want to go short right at that level. And I'm aiming for downside objective here. Old lows or a rejection block, old lows, equal lows down here, and then eventually this guy over here, and little fair value gap here, blah, blah, blah. You're not aiming for those right away, unless you're Michael and you know what you trust that that's going to be hammering down there on a higher time frame. You see a higher time frame objectives and you go, oh, I'm just going to aim for way over here. That's cool. That's cool. I'm just sticking with a 1 minute chart, trying to say, what's your immediate objective? If this was a 1 hour chart, you'd be looking for those objectives and you'd be like, I'm out right there. So if that's your entrance, you'll say, if I have a body trade above it, here's where it fails. If I have a body trade above this on a close, I'm on the wrong side of that. My stop loss is under pressure. So I'm going to get my stop loss off because I expect to see this tap and get the hell out of Dodge. This is a beautiful setup for a short right off that reversal there. In time, during the 10 o'clock news hour, you got these highs taken out. A reversal happens. As soon as you see that highs, like I've told you before, you see this, you go, great. If I see that get broken, oh, you see another one here. If I see that broken to the downside and trade back to, I'm getting short on that as long as the body doesn't break it. Stop loss goes there, 1%, whatever you're risking here. And I'm aiming for down here. And you would have just caught 55 to 48. That's quite a few handles right there. Just in, or if you're taking this low out, you would have caught yourself a dandy run there. And if you're risking 1% of your account, you just made a ton of cash right there and really clean. Like, you couldn't ask for a better entry right there. So you got 1, 2, 3 entries. Typically you just take one because it's pretty small, but your perfect entry is right there. You get it? Watch the spread. I've had this thing literally come up multiple times, kiss me but not take me in, and literally I was too perfect. The spread, the 0.25 or the 0.5 spread didn't get me in, and it literally came up and tapped me and left. So give yourself the spread as well. And then anyway, that's my point, Antor. That's what you got to be able to do, is identify where it fails. If it fails, get yourself out. Your stop loss shouldn't get hit. This is just a situation where if you get it whip against you, you're willing to risk 1% of your account. But if you're wrong, you want to get the hell out of this account right away. United Kingdom. Fucking call center pricks. As soon as I hear that call center, I think, oh my God. Sure. Idiots. Those scammers, they call you. They just go to town on you. Gotta block them. Doesn't work, but you block them temporarily. Then when they call back right away, you can go, I now know you're definitely a scammer because they keep changing the number on you all the time. Okay. Any questions with that, Antor? Yeah, that's a nice one there. That short, if you took that short, I was calling here. He's just got a nice little chunk of change. You're aiming for each one of those. Pay yourself at each one of those. Now you look, now that you got these lows taken out, you want to look for these reversals to get a body trading above them to start looking for a return back into this range here, or at least back into here. Or again, look for these lows over here, which is what they're just keying up, pumping off that midnight candle opening. See how they just keep coming up and hammering on it. But you want to see something clean, like this is nice and clean, like sharp. These sharp points, that's what you want to see in a time of day that presents itself with a nice clean entry. That's the kind of stuff you're looking for. Trying to bang around off of consolidations and dig out of consolidations, it's a tough place to be, man. You want to see time and price. And look at that, double or at 12. The squabblers, 11, 12, boom. Gotta love the squabblers. I don't have my little marker on here. My indicator. Magic moments. Doop-a-doop-a-doo-doop-doo. You see up, high, low, low, high. Are they important? Dang right they are. All right, so you got a body trading above here. So this short, if you're in here short, you're out here. So if this is an entry to go long, your fail-safe would be below here. So your stop loss is here, and you're looking for higher prices, and you're looking for entry here, and you're looking for a long, and it fails for you if you close below here. So 1% of your account there, pull your fib tool, trade on the way back up. Now, I'm not telling you to take a trade here, but this is a reversal. Look for key levels. Pull your little Fibonacci here. From here, that's the first little range you want to look for. As soon as it gets to 50%, pull yourself to break even. Now you have a zero stress trade and take 50% of your trade off right there. Because if it turns back against you, you'll go, I got to take 50% of my trade off there, right off at an old low, old order block, breaker right here. Call SBNQ entry at 18,352, 20 handles of cash. Russell, what you're trying to say is I got the nice setup, I got a clean entrance and a clean exit, and hey, they rewarded me with cash. That's what I want to hear. I don't even care about your cash. Just tell me about how great your setup was. Focus on the setup, people. Focus on the setup. Well done, Derek. 100 handles. Good work, buddy. Have to go, guys. A nice profitable afternoon. Thanks, Darren. You're very welcome, Paul. Quickly get back there before they find that you're out of your AWOL. I can see Paul running back in his little pajamas, running back to the house. He's been out making money. Quickly sneak back in before they know you've left the building. "30 seconds, awesome." You see what I mean by pay yourself at 50%? Now you just came back and you broke even. Did you pay yourself there? Or will you all get greedy and start running up? It's going to run all the way back up here. Pay yourself, man. Pay yourself. So you got half your trade off and now you broke even. You get to load back on again, start the trade over again. If it closes below this low, sorry, this low right here, then you're wrong. So this is a double down. You've got your money. You can go in long again. If it closes below here, you're on the wrong side of it. It's going to continue on the downside. Don't double down. Do what you do. Trade your trade. If it hits 50%, move yourself to break even. Pay yourself half again. Inside this range, you got this order block here. Remember, you're inside smaller ranges now, so pay yourself at the mean threshold. You could give yourself like 10% off there. Then move yourself to break even if you want. And watch for 50. If it hits 50 again, you take 50% off. You're at the rejection block here. There you go. You pay yourself again. If it hits 60, you move up to 50%. See how this is called buffering? For me, I call it buffering. It's not an ICT thing. But you pay yourself at that 50, comes back, you get to load that same trade on again. It's like starting all over again with money in your pocket this time. And start that trade again. You continue working up. As soon as it hits 50%, take 50% off. So it's like this previous trade, you paid yourself at 100% right there. Right? You paid 50 there, you put another 50 on there. And your break even. It's a zero stress trade right now. If it hits 60, you take a portion off there and then move yourself to 50%. Now, if it gets below this one and starts aiming for this one, look for either the midpoint or the low. You paid yourself at 50%. So if it comes back to break even, you paid yourself here, you paid yourself here. You've got two sets of cash in your pockets on this little revisit. So this is just coming back inside the smaller range now. You've got this order block here, this discount array inside here. So you keep in mind you're in a smaller range here now, right? From premium to discount. This discount, you have discount, premium imbalances. You see those? So don't start running all the way back into this one. Look at the range you're in, and it's probably, sometimes it's 3 or 4 candles, right? You got a premium imbalance and you got a discount imbalance. If I pull my fib tool inside here, you'll see what I mean. Let me get this out of the way. 50% premium discount. We came all the way back down to this imbalance right here perfectly. Come back up to this one here. Now Now see how it reacts. We want to see it get through that and continue climbing higher. If not, yep, there you go. Come back, find some support at it, keep going higher. Look at rejection block. I just try to get you to focus on being inside the range. Every time you get a little tiny swing point like this, look at the range you're in, and it happens over and over. Premium discount, premium discount. It just keeps looking for this over and over and over again. The algorithm is designed to keep looking for it. Make a new high, come back to a discount. Make a new high, come back to a discount, or vice versa. Or run a range, high, low, high, low, high, low. See? It's a beautiful thing, man. And on a candle that you're looking for a reversal on, a 30-minute, or 30 candle reversal, 30-32, or is this 52? Are we in a 52 now? We're in a 52. No, we're in a 30. What am I on? I'm on a 30-second chart. I should have been in a minute chart. Sorry. There. Now you can say we can trade in a 30-second chart. 30 seconds. Awesome. Sorry, Fernando. That wasn't on purpose. I didn't realize I was in a 30-second chart, but hey, it works. Do you find YM is cleaner? Is less wicky? The setup was solid for longer move down. So far, I've made up my losses from yesterday's barcoding. It was barcoding yesterday. I thought I lost it, but I had it. But it had gone away, but nicely came back. So the re-entry point, 39,580 is a nice entry point above equilibrium on your selling. You're selling this right now, Derek? Yeah, this to me looks like it's got more upside. You've broken this right here on the upside. Come back, find some support at it. Look for this to continue pushing higher. You want this to hold price right now and this to break right here on the downside. And this is the imbalance. We've cleared a high out here. You want to see a body get below, preferably here, trade back into it. Look for this order block for continuation on the downside. Blow through this, get through this on a big, bold, distinctive candle getting down. Otherwise, we're still going higher. And you may have caught yourself a really nice entry just above equilibrium here, right off of this mitigation block here. Doesn't take out any old highs. So you're looking here. And this one actually overlaps this one. So you want to see this get taken on the downside, come back in, find support at that, and continue down. Come on. Let's get Derek some money. Come on. So it's kind of banging between the mean threshold here and this candle's old high. Fair value gap. Any support. Mean threshold is holding. The tug of war begins. Who wins, this guy or this guy? Eating through this dude. Ooh, First time I'll call both sides of a reversal. Nice setups on each end. Yeah. Order block. You want to see this whole price to go higher, or again, we're looking for this to get taken on the downside for continuation on the downside. Otherwise, we're still back in this range. Pull your fib tool out of here, here to here. You hit 50% now. You want to see a reaction off of here. There's some equal highs. Probably not going to leave those untouched. But if they just tap, now you want to see this start coming back down if you want to get down. Otherwise, 62% is your next upside objective. So until we see a high get taken, I'm bullish on this from this reversal. Pay yourself at 62. Move your stop loss to 50. If you're using the fib tool as a method for managing your reversal. So optimum trade entry, great place to get a reversal if it happens, right? You want to see a fair value gap stay open. You've taken out a high, like this high, a high, a high. You just keep taking out these little highs on the way back up inside this range. You have a premium array that started the whole reversal in the first place. Right here, body trades below it, you trade into it. You're aiming for your lows. You hit the lows, you get your reversal pattern here. So you get your short off here, put your long on here, and you're aiming back for this premium array inside this range. So I'd be aiming for up here, 70, 78% or so. But you're constantly looking for these little reversals. Look for the fair value gaps. Look for these imbalances. Do 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 do. So you move to 60% now, or 62%. Pay yourself at 70. If you got a chunk on that you can scale out, otherwise you just drag your stop loss up to here. If it hits 75 now, you move your stop loss to 70. Now you've got this full fill right here. Done. Should you be paying yourself there and not reaching for too high a PD array? That's a full fill right there. Pay yourself at these points. It doesn't have to be this. Look for these arrays that are close to it at least, or inside the optimum trade entry for a reversal. So that's a full fill right there. And you'd be happy that you paid yourself at these levels. Because if this reverses now, you literally scaled yourself out all the way through an optimum trade entry reversal. It would have come back and took you out at 62% right there. So the rest of your trade would have been taken off there. You would have maxed out your trade right there at perfect exit. Now we want to see these start to give way to the downside. Didn't pay myself at 50%. I'll work on that. That's okay. You'll see it enough times and you'll go, I should start paying myself when I'm inside a small range, especially when you don't have this giant range day that you're expecting. Again, look at you're just sniping inside these, between these two ranges now, or these two fair value gaps, these inversions, right? So unless you're expecting a big, bold takeaway running day down in a positive direction, trade inside the ranges that you're in. And every time you catch a reversal, trade back inside that range, pay yourself inside the range and wait for the next range to set itself up. This is trading internal range liquidity. That's all we're doing here. And we're just doing it on a 1 minute chart. But imagine you would have caught that there on your daily chart. This was the same representation on a daily chart and you guys caught this. You see that reversal happening and you get in there, you have a little bit of a drawdown. And then you're just running for 1, 2, 3, 4, 5 days. The whole week, you've now picked your high. Or you're aiming for up here, whatever. If that's your stop loss, you know you're literally running for there. And then you look for the 1 minute reversal to catch 3 days of down right at that point there. This is using your higher time frame run and a precision entry on your lower time frame, and using 5, 15, 1 hour as other objectives if you're trying to catch short little quick trades. This is like super sniping, 1 minute. So optimum trade entry. Derek, are you still in this? 39,624. Oh, perfect. Good, buddy. You're still in then. I think you got yourself a reversal going now. As soon as we get this one, we've got this little imbalance. We've traded below the imbalance. I like that. We can come back up into that imbalance one more time for a reversal. You might actually have yourself a nice little reversal here. I don't like this fact this is sitting off of here. So I want to see this bold candle get through this, come back, use this as support to continue down on the downside. There's the reversal back into that little area right there. You want to see that hold now and start reacting off of here. Come back down. Do-do-do-do-do. See, now it's traded above it, so I hold off on that now. You wait, so now for sure it has to trade below here. Because this is that same thing I was talking about over here. Now you've got a body trading above here. I go, now I'm a little pokey, I'm a little shy here. Come back, find some support at this, and now we're going to go higher. So I don't like the fact that we traded above that imbalance. So you wait for a different setup, wait for a better one, wait for a cleaner setup, break below here and this candle here, which would be nice because it gets you below this thing. And this is the same kind of thing we saw over here or down here. I think it was, oh no, it was on one of those other ones where we saw that down and up right through the, yeah, this is it right here, right through it. And then it came back up. Was it this one? I think it was another one, NQ or something. We saw this big bull candle through it. Then it finally came back and took that high to get in. So this is the same kind of thing. We went down, gave you a close below this reversal, came back up above. Not sure. Now I want something clean. Dropped all the way down below it again. Now it's back up above it. If it closes above this again, we're in that little consolidation bull flag crap happening. Government of Canada. Stand by. Hello. Oh, okay. Yes, thank you. Sorry about that. I had an important phone call. I had to take that. Just chasing myself for fast asking myself for overcommit to the high of the week being created early. Are we going to get an expansion, or are we going to start ranging? In my opinion, we will range until we don't. That's good sound logic. I don't want to. I need those lows taken out before I head to the pro shop today. I texted Michael today so he could work some magic. Derek, do you trade NQE as adjustable IM? All the provided kind of price action. It seems to me NQ is neurotic and psychotic most of the time. Michael likes it, so I try to trade it, but I don't see it as well as I do see Dow. I like trading NQ even if psychotic. LOL, just slip hit a Mickey. It'll calm down. Yeah, it has a day. Its day will come. It'll calm down. See how you're just sitting inside this little ranging now? I want to see this get below here. You'd expect to see this react off of here sooner if it wants to drive down. Like they're just building, engineering like some liquidity in here now. And you're right in the middle of that range, so right around 50%. So where do you go? Higher or lower? 11 o'clock, you usually get a reversal into 50 to 62% of the range that was created between the open, or 10 o'clock and 9:30, or 10 or 9:30 and 11, depending what's the bigger range, I suppose. And we're back up to 50% here. Didn't quite catch 62% of the entire range. But we did hit 50%. Now we're kind of hanging around in here. So lunch hour, do you take out the high? Do you take out the low? We're starting a new hour. We're looking for a silver bullet setup here. I still keep my eyes in here for a premium array. Just keep your eyes right in this area here. I'll draw it out for you just in case we end up reaching the objective overall. There's another fair value gap above you here, one here. You want this to be rocket fuel. Shoot higher. Consolidation. We still don't have a body breaking above the consolidation yet, so not a cam model entry. Unless we have a body break below the low of it. Then we get a different feel altogether. Cleaned out the highs, cleaned out the lows, extended the range a bit more. A small little circulating between here and here. We got one candle, two candles, so we want to see this create a low. What is it, an 18 candle? Then a 19 reversal. So 18, 19 will be our retrace back into a discount, into the cam model 1. I'll look for a run back into here. So we got to finally broke a body below here. See that body below there? Trade back to it here. Short there. I was looking for a cam, but we were talking about this one. We got taken out here. So this is the candle we want to see it take from the downside. It took that right there. Traded back to it right there for a short. Into a discount range, so you're right into a discount right here. And you're back into this guy again. So we'll see how it acts. Inside this, you want to see it blow through here, come back in, find some support, and continue pushing through. You got to close below here, though. For me, it's got to close below here to continue shorter. Otherwise, another retracement higher. But then, even then, you got to see it get through here to go higher. So now that we've hit that one, we want to see this one. We hit just under 50% here. Find support at this, come down, back down again. So you're between here and here right now. Trying to decide whether this is a continuation to the upside. You need to get through here to get confirmation on that. If not, we need to get through here for confirmation on the downside. See how you have a fair value gap forming here? You open, you close, and then you open right on the low of it, come back, almost tap it one more time. Now you're banging around in here. So you got to get this one drive right through here with a close. We're coming into that whole 9:30 lunch hour crap going on, right? So if we take this low and then come back into the range again for lunch, where's your take profit, Derek? Is it just below the lows? Is that where you got your profit taking? Balance right there. Cleaned it up. Broke below. Trade back up inside it right here. Short. Inside that range. Take that low. You don't want to see it get above here though. Revisit this. Buffer it. Go lower. I'd expect to see NASDAQ now go lower from there. Let's take a short here. I got a body below here. We've traded back to it once there. Stop loss has to go above here though. Yes. Inversion. Trade below it. Come back up inside this order block. Now we had a body trade below it here. Trade back up inside it. Short. Looking for a short in here as well. Take out these lows. Discount over here. Got to get below here on a close. Working our way down. You want to see this close below here now. So this getting beaten in here and waiting for this setup to occur right there is your entry for a short. Discount array. Pay yourself here. Derek's is 18,520. That's for, yes, it's into the fair value got created between 836 and 838. This one right here. That's your downside objective. I like it. Nice. A little balance right there. Nice. You want to see a body get in below here. Otherwise, we're back into this range again now. Come on. Get a body down there. It opened below. So it's just telling me that, guess what? I'm heading lower. Come all the way back up inside that fair value gap. Right there, it's just telling me it's going lower. Again, this is one of those ones that if it runs above it, then you say it's going higher, and it's going inside this range here, higher inside the range. If not, we're going to continue on the downside so that the bias is down now. We did get the reversal right here. Comfort. We tried to get into it here, got kicked out of it there. Wait for the confirmation. It finally gave us the confirmation here. Traded back to it nicely here. Continuation on the downside. We want to see this get broken on the downside. It did. Now you get continuation on the downside. So we're staying in price action, and we're staying, and you can see why price, the algorithm is still showing you, okay, here's the direction I want to go. And we're staying in price action. That's the whole point of this, right? So look for this low. So now you're looking for Derek's objective, and we want Derek's objective today. I like that here, and I like that here as well. Oh, don't beat yourself up, buddy. Don't beat yourself up. It's a good learning experience. You're still in it. You've been forgiven, and now you're being blessed with some return here. You've had to endure some sweat, and that's good. So it just kind of reinforced a little bit about watch these reversals, and all the time you're getting the support to continue to the upside until you see something that breaks to the downside. Then you know, you can watch your entry in terms of is it coinciding with price action being aggressive for you on the downside. So I think because that was, like you were saying, it's retraced back quite high. Filled this fair value gap right here. Optimum trade entry. Then you see your reversal confirmation. So don't beat yourself up, man. You're still in the trade. You're still doing well. Move your stop loss into a break even, or make it a zero stress trade now. Even chewing on golf balls. You've been peeling the skin off of golf balls. Your teeth are wearing out. Needed absolution. No, you did fine, Derek. That's you still caught the trade. Sometimes you have to endure some of those bigger drawdowns, but at least you saw where it was where you entered and you thought, okay, I had to endure a bit of a drawdown there. You picked the right direction. Celebrate that, man. You got the right call in the end. Okay, so my eye goes here now. You've taken a low. This is one of those ones that if it comes down to rejection block and then peels off of it, comes back through here, you got to go long for a little while. And inside that range, you say, what PDRA sits above me? You got this little guy here and that guy there. And there's a little piece here as well. Needed that absolution, but for a bit needed the absolute instead. You're an awesome. Don't even let it phase you. You are steely-eyed, my friend. You know what you're doing. You're gonna have to have some eggs Benny today there, Derek, because she almost turned on you. Is this a mean threshold holding here? Yep, mean threshold of this order block here is holding price right now. So if you do get another one of those little retracements, pull your fib tool from high to low, watch this reversal here. If it catches it, look for a run back up into this range here. And that mean threshold is holding price. That's why sometimes when you have a downside objective, you have to include these mean thresholds as points to you want to see it break through that. So to continue on the downside, you want to see it break this on a close, like a big bold candle on a close, get down into your rejection block, come back up, find some support, and then continue down again. See how we've closed right on the high of that? If we start to push through it now you've already come back into the mean threshold of this candle. You want to see that snap off there and start coming back down. There's no reason why you should be popping back up there again, unless we have an intent to come back in here. So you want to see this push through here, mean threshold of this candle. You're between here and here right now on one candle. So you get through here, start pushing lower to get this. So all you did was just come back inside that fair value gap, balance it, continue through. Watch where this closes now. I didn't even see this one here. I'm a little late on this one. 62% inside that small range right there. We ran the lows now. Another one of those, where this closes, look for this here, then I can move this guy down to here. If that doesn't close in. So you're constantly looking for a low taken out and then looking for this fair value gap to start forming here when the lows are taken. Like that low gets taken, you look at that and go, okay, is this potentially a reversal? Ooh, this low gets taken out. Is this a potential reversal? Nope. Keeps coming, keeps coming, keeps coming. Low is still taken. Another one forms and you go, ooh, is this the one that's going to get my reversal? Comes back up, trades above it. You go, yes, it is. Come back inside it. Then you go, ooh, maybe it's not. You're on the wrong side of it. So you wait for it to clear the other upside of it again and trade back into it. Clears the upside, trades back into it one more time. Now you go long, looking for your 50%, 62, blah, blah, blah. Reversal. That little guy there was the little linchpin for, are we going higher or lower? Key off of this, finally drop down below it. That held price. Continue down. Fair value gap, it filled in nicely. Now continuing down. Stay on the horse. Still bearish. Yeah, it's why that sell at the premium protects the risk a bit. That's why the sell at the premium protects the risk a bit, isn't it? Yeah. Agreed. Yeah, yeah. 1 minute fair value gap below price, 10:30-ish. That's my train station. Below price. Ooh, here we go. We haven't quite hit the rejection block either, but now we're posting above. So watch, we might be coming back into this range again now. 8 seconds. This is just a price action study. Now we're bullish. Now I'm bullish until we get through this again on the other side. And you want to see it close below that, not just a wick. This could be a fair value gap forming here. I do like the idea of running these lows out and coming back into the range again for lunch. Just running that low and then pulling all the way back in and heading for this stuff for lunch hour, running back up into that range again. Believe it or not, NASDAQ looks cleaner. Oh, I'm in a run here. Oh, I'm still in that trade. I forgot about that trade. Scooby-Doo. I forgot about the trade I took earlier. Oops. So return to order block. I'm going to put my train station down here. I'll clean her up right there. Trying to lock in some profits here so it doesn't trade back against me. Come on. Give me some loving here. There's the entry in there. That's fair value gap. Come on, push through. Push through. because I looked over at NASDAQ and thought, oh, that looks cleaner. That would have been a nice entry. Come over here to look. It's like, oh, I am in it. I forgot about that. Off that order block. So even that was a big endure, a reversal. Yeah, it's fine. You sold it. I think, Darren, I need the money. Which one are we in? You're in the, yeah, you traded above, now you traded below, came back, find support. You're still good, buddy. You're still good. See, it looked like it was going high, closed above, then closed below, came back, found support. That's a good sign right there. Now you continue on the downside. That looks like it finally closed me out there. Okay, good. It ran through, took me there. It'll probably still come back down into here and finish off. But I'm happy enough with that. That's a nice little $500 run. Ideally, I'd like to see that create a fair value gap there, that you could have just put this fail safe above that. But this is too high for me. I didn't want to leave it that high, so start chasing it right back down. Look for a fill here. That was the train station objective here, as Derek puts it. I like that train station analogy. Look for that to clean up that. Come on, Derek. Let's get you some paid money. I need some money. You are at least break even, I hope, Derek. I hope you're trailing that sucker. Lunch hour, it looks like it's going to take these lows for lunch. I'd like to see it hit off that New York opening session candle. I'd like to see it hit that one more time. That'll clean up this low. And then you can run back for higher prices. Look for a swing point then. Back into the range. Finally hit that objective. See, I should have just ignored it, left it alone. Would have finally hit the 750. See how even now it's trading below it. You could have come back to that later. That's all right. It's all good. Look at how high resistance that is compared to NQ. Much cleaner now. That psychotic thing, heard you call it psychotic, Derek. And it sent a message over to the Dow to go crazy on you. Oh, you think I'm crazy? I got friends. I got friends. My friends go crazy too. Yeah, look how much cleaner that is. And Dow with its little spots. Have an allergic reaction, Derek. I can taste it. It's so close. Jerry Maguire. Show me the money. Okay, you've got this here. Body trading above it. So now we're bullish inside this run. So watch this. You're going longer. You don't want to see it close back through this again. I don't even like to see it come back into that, because you just hit the rejection block here, and that would be a bitch of a place to stop. Pay yourself at rejection block. If you don't, and this runs all the way back up into here, you curse yourself for not paying yourself at rejection blocks. Because now you got a reversal right here. Body closed above it already. I literally opened on it and continued higher. So if we get through this one, it's another confirmation. And if you clear this candle's high on a close, find support, you're looking back into a deeper run into here now. So what you want to see is this get back down below here. This is good. Find some support off of this, come back down. You don't want to keep going up. There's your reverse. Come on down. Hold that price. Rejection. See that? Rejection block. Just tapped on it. Rejection block. Took out old lows. Now for me, I want to see this close below here. Ideally below here as well. Inside this range, close below here, come back, find support. Then you're arguing between here and here. We're between these two. And you want to see this discount array inside here. Like if you pull this range here, you'll see this very easily. You'll see these premium and discount gaps. That one's above 50. This one's below 50. So you want to see the discount one give way for continuation. Otherwise, this premium one gives way just to come back, tap that, and get out of there. If it finds support at it and starts to leave, which is not what you want to see here, it'll start going higher. So it just comes back, finds support at it, and drives higher, which is not what you want to see. My buddy Derek does not want to see this. Don't hit your screen, Derek. Don't punch the screen, man. So now we've got equal highs. Keep holding on VWAP. It did need some something. Sometimes it's likes to retouch the equilibrium I found and then move back down or up depending. Went back into the rejection block, didn't it? Yeah, it hit the rejection block and actually froze right on the high here. So you're really in between this little range here right now, and you're more positive than you are bearish. And this guy is the only one that's really holding you back. You're between this premium one and these discount ones here. So if this continues to provide support, you're wrestling between that guy and that guy for higher prices. You want this guy to give way and then this guy to give way to go shorter. And that's just one of those things to look for. After you take a lunch out, look at those equal highs you're looking for here. So if we run through here, clean this up after lunch or going into lunch, reverse, take these old highs, get back into this range. We'd look for a nice, clean, sharp reversal in here for lunch. We got 8 minutes to make up our mind. Close below or open below. Important levels, eh? Now I have to endure lunch price action. I took my profit and left. Love this lunch hour price action. It's not for me. Although this price action is not for me. Yeah, lunch hour is kind of crappy. But hang in there, Derek. We may still salvage something here. You open below the low. So I just want to see this come up. Give it a little tippy tappy now. roll over and come back down. This is really doing a great job of holding you back, holding you from running up higher. And I like that they've established some equal highs that they were going to, I'd like to see those get taken out after lunch though. Give retail the belief that that's the ceiling. A roll over, get lower prices, and then blast through them during lunch hour. Because if this runs back into here, into the midpoint or 62% back up into here, and then rolls over for 1 o'clock to take this out to go higher, it's hard to predict where it's going to go from there. Like these relative equal highs here, or the lows here. You're right in the discount range here now of this whole piece. Come on down. Main threshold off the order block, the opening midnight open candle. Come on down, Derek. Get off that ledge, Derek. You're fine. Here's the discount. Now you want to see it get through here on a close, not just come back and tap it. Otherwise, coming back to a discount to go higher is not what you want to see. We have had an open below, which gives me some hope that we may get back more than just this run into here. We're really between here and here right now. And that candle's hit it, and that candle is all in one candle has hit premium and discount. So now it's getting smaller. It's got to break out of here somewhere. It's between those two candles. So we're cheering for Derek's downside. And I like this, and I like this below here. You want to see this push in here a bit more. I notice we don't have a wide open 50-minute fair value gap above price. May want to dine in here before PM session. Yeah. We'll see what it's like in 5 minutes. Usually you'll see a dip down here right at 12 o'clock. We've got the 12:50 macro or 11:50 macro opening up now. So I don't want to see this just run into this discount range here, which it just did, and push higher. I want to see it just run in here, slowly degrade and eat through this. You know what we need, Derek? I've been remiss in my vegetables. Let's give it a little tantalizing carrot. Maybe that's all it's looking for. Smell the carrot. No, it's just entertainment. Morning, afternoon, jumping in and say hi, then out for meetings. Have an awesome day. Awesome day, Derek. Enjoy yourself, buddy. We're having fun with Derek today. Dave, I mean. This reminds me of the day when we had Lauriston just waiting for this candle to trade down. We were having such a laugh. Snack time for the cat. Hold price a few minutes if you would. We'll try and dish this out here for Derek before he comes back. Come on down. I like this New York Open midnight candle is holding price. Get below here. Come on. Order block validated. You don't want to get above this. That's all it took, was just to come back into a discount array here. I don't want to see it push higher. We're still bullish. And then you're bearish when you start getting below here into this range. So I really want the discount array of the equal, like versus like. You want to see that get taken on the downside to continue on the downside. And the fact that we're slowly nibbling through this one and digging into the 50% of that whole range, I want to just see it continue to eat through here. And I've said that a million times, I know, sorry. They need a little carrot. It's lunchtime, so it's time to feed it some carrots. Where did our NQ end up? Oh, we didn't do too bad then. It finally did come back and trade against us anyway. So hit that downside objective nicely, wick through it, hit a little reversal right there. I don't know about that. It's pretty close though. Yeah, I guess it is. Came back, filled it perfectly right there, and then kept leaving. Tell you, you see him body trades through it, comes back, cleans it up perfectly right there. Pay yourself, order block. Pull your fib tool inside here. Like if you look at this one here, just pull in that fib tool again. If you took this right here as the entry, it came back, got you in perfectly there. There's 50%. So as soon as it gets to 50%, move your stop loss to break even. Then it goes up to, quickly rips through. So you just run your stop loss, follow it up 60, 62, 70, 75, 78. If you're ready to follow it all the way up, you'd stop right here. You pay yourself at each one of those. If you could do this, this looks like it just went whip up, whip down. So you take your stop, you follow it up, just drag it up with it, drag, drag, drag. As soon as it hits that, baff, comes back and takes you out. You're out of your trade. You've caught the optimum entry drill, trade entry drill right here on a 75%, 78, 9% retracement inside that range, right off of a reversal. That's why if you're aiming for up here, you overshot your PD raise, you just look at the small range you're in, you pay yourself there, and now it's come all the way back. Because if you haven't, if you were aiming for up there and you looked at that as your reversal and you didn't get it, and you're like, I didn't even get the rejection block, pull the fib, use your fib on the way up, you would have just cleaned up inside that small little range there. That's reading price action and not getting thrown off the horse. That's overextending your PD arrays outside of the range. You have not broken outside that range yet, so you need confirmation to break above that to go higher. Anyway, you get the point. Come on, Derek. That's what we needed, a little lunch action. That's all I needed was a bit of carrot, my friend. It's lunch. It's doing what we want it to do for lunch hour. Come on. Derek's got to get paid here. Let's go. Carrot on the stick. Motivation. Carrot on a stick. Not carrot or the stick. You don't want the stick. See, now, typical Canadian would have said carrot or a hockey game. They'd take the hockey game for sure. Okay, I'm back. Now we can move down again. My thoughts. If price takes out these lows, it may move back up into this afternoon. If it takes out the highs during lunch, not the whole way this afternoon, then drop low. Yeah, that's what I was saying. Excellent. Sometimes it likes to do nice things when I'm in the pro shop. 522 or bust. 522. Come on. Where's your stop right now? Where have you trailed your stop to? Now that we've broken this low, I like that. That's what we're looking for, a break below that low. We got it. Now you're looking for support here and continuation on the downside. Oh, you don't want to get back in here. Mean threshold. You want to see this hold price here. Come on down. Quit teasing Derek. He's like me. He's an elderly man. He can't handle all this stress. Hey, Derek, where's your stop sitting right now? Are you in profit at least if this turns against you? Mm, mm, mm. Do-do-do. I couldn't see around the corner there. There was a carrot right there. That's what it needs to see. Michael says, I asked TradingView to enforce naked trading. It's for your own good. Let's put a picture of Brad Pitt up there. My heart's ticking, Martha. Susan says, so who do you trade the E-mini S and futures with in the US? Boy, there's a lot of screaming text there, Susan. That 15-minute fair value gap looms large in the head above price. Yeah. There's lots of futures companies that trade E-mini futures in the US. I'm not sure what does Derek use. Oh, you don't want to get above this one again. Or block. Support. You don't want to see this start going up now. Off of here. Through it. There you go. Right back up into here. Gap down. Nice. Start slamming. Here's your carrot. Come get you some. Come get you some carrot. Okay, Karen, you're done. Bye-bye. Totally inappropriate. What's with that? Too much screaming texts. Could have been a Karen, not a Susan. We don't need people like that. You don't need to be rude. You don't need to be swearing. You don't need yelling. You don't need any of that stuff. I'm calling people out. I don't need that. Nobody needs that crap. Nobody talks to Derek like that. Nobody puts baby in the corner. Susan's relaxed. She's going to time out in the locker. Who comes in all caps anyway? What's with that? You can't come in all caps, especially if you're new. Come in yelling all capital letters at people. Does that mean she's not going to subscribe now? Well, it's Team Derek. We're trying to wrestle this price down here for you, buddy. We're in a consolidation. Come on. See how it's closing above and below? Closes above, gaps above, closes below. It's just hanging right inside here. I'm going high, going low, going high, going low. Building some liquidity on both sides of the market. So it's got to go slam down and then come back into the range. That'd be really nice to see them building all this down here, drop down, give retail a sense that this is the low already factored in here, and this is providing a level of support, and they're looking for a run higher. Take them out first, then take it higher. Or just go bang up, down, and then back up again. That'll really rattle them all. It is definitely sitting here way too long, my friend. Way too long. 11:32 till now, 38 minutes. I'm going to go for P. So, Derek, there you go. It's coming down now. Or I can actually enter into it, then get out of it, and it will go. I'll be right back. Tried everything, Derek, to get this down there. I've tried bowel movements. I've tried coffee. I've tried phone calls. I've tried everything to get it down there, man. I can't do it. We're just sitting here waiting on her now. Equal highs, equal lows. Would you say they're engineering some liquidity here? Are we marking time during lunch hour? This may be one of those, you don't get the lunch hour taken out. You see it just around 1 p.m., take it out, and then start running back higher. Sorry, I didn't even take the carrot too quick. Do you want the carrot? Have the carrot. Go on, have a little nibble, and then we'll move it down a bit. No sniffing the carrot. Just come and take it, damn it. At 52.32. Well, you might still get an opportunity. There's 52.32 right there. Did you take profit right there? Now it's a matter of principle. I'll catch you guys later. If Derek will do the session on Skype this afternoon. We may come back here and see Derek still wrestling with the market here this afternoon. Look at these equal lows here. Well, we're marking time, buddy. You're prepared to go back to a 5-minute fair value gap? Into here. Ooh, you don't want to go all the way back up there, do you? This little imbalance would be, I'd say, sure, that little imbalance, come back up there, tap that and go. We want to see it run all the way through this. Mind you, it's 5 minutes, I suppose. Yeah, if you do, then you're going through here. On the upside, you'll expect to see further upside run. You have to lose the premium. As far as I'm concerned, you'd have to lose this premium one first. So you're kind of banging around a lot in between it. This premium one and discount one inside that small range. Look where that 50% lies, right in the middle of that. See that? It lines up perfectly in the middle of that fair value gap, or that price imbalance there. Is that coincidence? I don't know. I don't know. Oh, I don't have it as a, I had that as a key level standby remove. Interesting how it keeps coming back and revisiting the equilibrium of that between the high and the low there. Right. I guess you could use them now. You'll still see turn points, but 23, 22, 23, 27. 27's next. If that closes above there, then you might be looking for your fair value gap above you. Just clear out the liquidity above, run back down, take out the low, and then start running back up higher again. Right to the top of that rejection block again. Body traded above it. Oops. Oh, what's going on there? Body trades above, come back, find support. Now you're bullish for a bit. Now you've taken out the premium array in there. Come back, find support at this candle, pop up. Or we got another trade down below. Took at all these highs. Maybe we'll come back and run all these lows now. We have to see this close back below here. I'd like to see it close actually below this candle here. Again, We extended the range. We're all running out of PD arrays here. Pop up above it all. You either run down, extend that smaller range, go back into consolidation again for the lunch hour, or body still closes above here. Wick back into here. Push higher. Look for higher prices here. That reminds me, I've got to do some sanding today. Found support off this order block, tap on it. We're going to start working through here now. Level of support, order block, level of support of the order block. You want to see it climb on top of here and keep pushing higher. Take out these highs. It's not creating any reversal for us here yet, so now you're bullish out of here. That tipped its hat to us in that direction. It took out the premium array. We're looking for this discount array, so we say, great, now we can keep going lower. Then it ran above it. Like, no. All the time it's staying inside this one. We're expecting it to go lower. And then when it closes above that one here, now you go, now you're bullish into a higher time frame, sorry, a higher objective, which is your rejection block and your old highs. Found support, come back, found the body now. Remember the three different arrays? 1, 2, 3. There's the first one. There's the second one. This is a 27 candle, so we should see a high here. You don't want this to be this. Here's your swing point. This could be a further up push. You said the bad sentence, Derek. You said, I will allow it to come up to that 5-minute fair value gap up here. And it said, oh, okay, well, if you're letting me come up there, then up there I shall come. You're still bullish. Now you're inside a larger range. Premium. You get above here, you're really bullish now for a further upside. Here. Right now, objectives are just looking for here. High, high. This is still holding everything back. This is like the premium array, equilibrium array, discount, fair value gap. See that? So we got above 50%, climb on top of it. Now, if you blow through this one, more bullish. If we stay inside this range, you want to start seeing it close below 50% again. Otherwise, this order block's still giving us support. There you go. A little gap down, nice. It's a 30-32 now. You don't want your swing to be down here because then you're pushing higher. You want your swing to be up here so you can get back into this range again. if your swing happens here, you might see a run up here, a crazy Ivan, either drop down or crazy Ivan and then push higher. Crazy Ivan. What a name. Dave, how's it going, Dave? I was referring to the one just above equilibrium. Oh, that fair value gap. Come on now. Close below here. This is good and supported. Took out those equal highs, left these. Look at this. You got tons of liquidity sitting down here. %, froze right on 25%, wicks up in there into the premium of the premium range. Discount of the premium, run into the discount zone, and you're back into the discount of the premium. All is in balance. Back up to the bottom of this candle, mean threshold of that candle, get through the mean threshold of this candle, start pushing below here. Now we're on the other side of this 50% line. You want to see a body close below here, like that. Come back up, give it a little kiss, come back down. Hey, I said kiss. I didn't say get all grabby in the moonlight here. Imbalance, imbalance again. See how he dipped down into discount range? Inside this small range here, right down into discount array again, premium, discount, inside that big ass range. And then you got your equilibrium fair value gap sitting there in the middle. And it's interesting how it found it here and it created it, recreated it again right here. Okay, so closed above it again. You're back into a premium of a premium range. You want this to hold price again. How many of you get bored of studying price action when it gets into this? Or does this kind of excite you and say, is even in a consolidation, can this shake you off? Can you predict the wrong direction? Are you overshooting your PD arrays and looking for here? You keep guessing higher, keep guessing lower, and you keep getting thrown off because it keeps reversing on you. You say, this has the support price to come back down. This has the support price to go back up. If you want to stay inside here, you bounce off of these two. So the pivot is right here off the equilibrium to go back up. So you're bullish inside this range. You're bullish to go higher. You want to see it close above that to go even higher and take these highs out here. or you want to see it drop below equilibrium again, and now you start to run back into the discount of the disc or the premium of the discount range. We're in discount premium, premium discount. Session today was great. I had a couple of really nice trades. Gold, I had took out a nice oil trade, took out a nice NQ trade earlier this morning. Derek's been killing it this morning. We've got a lot of people just nailing it this morning, which is great. They're catching some nice runs. Move to the side, and they're disciplined enough to move to the sidelines now and wait, which is great. Oh yeah, would that be cool if this just went sideways for today? I do believe though, oh, we've already gone it. Already ran that. We're just below the 50% of that wick. Yeah, this could be a small range day, a small candle day, big wicks, small candles. Here you go, Derek. Come on, baby. There you go. Did you take it? Did you get your 32? The sell side liquidity was taken. Are you waiting for the train station? You still waiting down here? 38. Crazy Ivan came back, saw you, took you out. That's the crazy Ivan. Your question, trader, what was it? Dave Trades. My trade was right off in here somewhere. I got it off here, took it out here or here. That's that one. Coming for the carrot. Coming for to carrot me home. Forget this one now. This whole area becomes interesting now. Now that we've taken that low, look for this area of interest. $522. Oh, so you are waiting for 522. Come on, baby. Come get you some carrot soup on a train. Excellent. Good for you, Dave. Did you get the setups you were looking for, Dave? Like, did you catch the, come on, Derek? We're all at the the train station here cheering you on. We see your trains chugging in. There's only one wheel left on your wagon. Derek's backing up. No, no, what are you backing up for? Come on. This is gonna have to be throw mama from the train kind of moment here. We have to throw Derek from the train over the finish line here. Everybody heave ho. Throw Derek over the finish line. He's gonna have to pay full money for me for waiting. Derek's been shoveling coal trying to get this train down the track here. This reminds me of that time when we were with Lauriston, just howling, just waiting for this damn candle to cross the line. How do you like your high resistance lunge hour? What are you at, 42? 42, 45. One of these two will nail it for you, Derek. Come on. Let's put the carrot right in there so you know you got it. Come on and smell that carrot. Give it a stab. Give it a stab. Come on, get your carrot. You got it right there, buddy. I think that's it. Nope. I'll put the carrot just over the line. Equal lows are taken. Come on down. Short of the 1127 candle. Quick 1 to 2 trade. Yay, Derek, you got it, buddy. Are you still going to 22? You want one more handle. I'm gonna put my, you're really making me work my carrot here. Yeah! Woohoo! It dives in the carrot. There you go, buddy. You're in. Now it's going to run past your train station. You can't get off. It's like, Derek, you're supposed to get off the train. Derek. Look at that. Stab the carrot. Way to go, buddy. We've been waiting for this all day. Our voices have been raw, trying to cheer you on. Turtle soup time. Wait for it. Nope. We shall not give you this yet. He jumped off at 522. Good for you, man. Well, it's a well-deserved fight, man, right from the top all the way down. Good for you. We dragged that train over the track, over the line. It ran out of juice. You got it over the line. A couple of horses pulling that sucker over. A couple of donkeys, give them a carrot, they'll pull it over the line for you. Now you can move to the sidelines and we can wait for a reversal. This looks like a nice little reversal. Let's go, Ellie Mae. There you go. I got this one live. Watch the 50%. You don't want to see it. Just tap this and come all the way back down again. Get through this. Let's go along there. Okay, I think that'll be it for me. That was a long trade, Derek, for sure. All right, well, I'm out of here. That'll be it for me. Awesome work for you, Derek. I'm happy for you, buddy. I'm glad it panned out for you. And I will see you guys tomorrow at 9 a.m. Derek won't be here this afternoon. If I've got some time, I might pop in and try and do a Skype meeting. If Derek's not around, then I'll try and do a Derek thing in the afternoon on the close of the day. We'll see how that works out. And yeah, if not, I will see you guys tomorrow at 9 o'clock. Thanks for tuning in. If you enjoyed what we did today, hit the like button. And if you're new to the channel and you like what we're doing, just by all means, subscribe, pop in. Everything's for free. You can pop into the Telegram channel after hours. All the gang's in there having a chat, working on charts, looking for ways to improve their trading. So you can get in on that if you like. It's in the bio description above. You can pop in there. You'll see 3 links and just click on one of those and you'll find the Telegram channel. Until then, I will see you folks tomorrow. Very much appreciate all of you who popped in and who subscribed. We got 764 people. That's pretty awesome. I'm loving it. Really humbled by all the number of people that we have here. So that's awesome. Thanks again. And I will see you tomorrow. If there's any questions, nope. Well done, Derek. Excellent work, buddy. And we will see you tomorrow. Enjoy your day this afternoon, Derek.